This is very much a 1914 kind of scenario. They're in a situation neither side really wants to be in, but other forces have pushed them to where they can't back down. The president is afraid of looking weak, pathologically, but especially to the conservatives in his party who are demanding a wall, his core constituency. And the Democrats can't be seen as backing down. Plus, they don't support the policy, and they think the politics will work out for them. And starting next week, they hold all the cards. So this thing is going to be a contest of how much pain the Republicans are going to want to take. And, the president, his whole brand is not backing down. So I don't see a short ending.
Christopher Smart, every day we try and come up with a reason for the market to sell off. You point to all the usual suspects, and often we do point to what's going on in Washington here. But realistically, that's not having an impact on the economy or the fundamentals in corporate America, is it?
I don't think it is, although this is sort of an unusual turn of events in Washington. I think to have the president at loggerheads with his own majority in Congress and the government shut down with really no end in sight is new. The standoff with the Fed chair is also new. And I think it's worth pausing for a minute over the resignation of Secretary Mattis, which I think has unsettled people in terms of where we are headed and where our foreign policy is headed. But you're absolutely right. Mostly markets respond to economic signals. The economy is still very strong. We've seen that in retail sales today. If anything, the outlook for the Fed going into next year is more dovish than it was before the sell-off in September and October. But I think we're seeing a number of more technical issues. It's in some ways, it's the revenge of the robots, the increased prominence of algorithmic and passive investors who are trading prices or transactions are being made more on momentum than on economic fundamentals, and not pricing in future expectations as much as price momentum from yesterday.
You're jumping ahead, Chris. We're going to talk about that next hour with the guy who wrote that piece in the Journal today. Mike, let me just ask you, the president is insistent that he gets funding for this border wall or for border security. He could have had $25 billion if the Republicans struck a deal about this over the summer. Well, what's he doing now?
I have to say, it's hard to predict. He's kind of a chaos machine. I think when in doubt, it's emotional. And if you look at the revolving door at the White House, the departure of Secretary Mattis, who was the most respected cabinet member, in many ways perceived as kind of the reinsurance policy on the president's foreign policy, quitting for reason, and the humiliation of having the Republicans lose the election that was a referendum on the president. All these things have compounded and caused the president to use an untechnical term, wig out a little bit. So I don't know how rational it is, because with the Democrats in the House, by the way, it's harder to get a deal because they're now holding a lot of the cards. You couldn't even get something through a conference committee going forward. So I've been in politics a long time. I don't see a strategy here. I just see emotion.
Mike, how does he wig back in, so to speak? Who does he need to, who would you like to see him surround himself with? Is there more turnover that could bring in the kind of fresh blood that you think would have the institutional knowledge and be able to both push his policies forward, help the president achieve some of his goals, and also reassure investors and Wall Street and Main Street?
Well, that's exactly right, and that is in his interest and the Republican Party's. But the problem is Donald Trump is the atomic clock of being Donald Trump. He doesn't change. Most presidents get thumped, as President Bush said in the midterm. They change. So even if you bring in the best advisors of the world, one, they won't take the job in the environment the president's created, and two, they don't think they'll be listened to. I mean, I heard my friend Kevin today talking about reassurance on Chairman Powell, which is exactly the right policy, but since when does the president listen to his advisors? If the market continues to decline, I think he will try some method to either shame, pressure, and I know it's dubious legally, get him out of office. So, this president is not in the talented advisor business, so that kind of checkmates the obvious right solution to stabilize that.
Finally, Chris, if this goes on, the shutdown long enough, it could have an economic impact, couldn't it? I mean, the government spending is a part of our economy.
Oh, absolutely. And I think it's that real impact from the government economy, from the government spending directly. It's also impact from just expectations about who's really running the economy. What can we expect from fiscal policy going forward? What sort of relationship, if any, can the new Democratic majority in Congress build with the president? And I think those are very big questions that will be increasingly important in the months ahead.